What's up, PSC 13 members? It's Navarro, head trader Penny Stocks Club 13. It's Sunday, June 26th, and we're going to talk about the SPY and some stocks that we have on watch for the week of June 27th, 2022. So I'm going to get right to it. Right before I do, though, I do want to have a disclaimer. This is not trading advice. This is simply for educational entertainment purposes only. You trade at your own risk. Alright guys, so with that out of the way, let's go ahead and get going. We have the SPY right now. This is what we're looking at. And I did mention that it was going to try to come down to the 360 level. It was about $2 short, but it did come and try to get that 360. Then we were waiting for that consolidation, that temporary relief. We got it. Then we got that 388 level that we spoke about in the chat room video. And now it looks like they might try to come a little bit near this 400 level. I don't think they're going to quite get to that 50 EMA. Again, it all depends where the market opens up. It might open on another gap up, or it might open on an inside day. We still need to know what's going to happen tomorrow morning. Then we can base our strategy off of that. But again, we did get that temporary relief with some good volume. You can see all the buying pressure on this volume bar right here. So that's what we have in the SPY. If we look at current levels right now, that 400 level is inside this gap, so at the bottom of this candle where it closed. So to fill that gap, that's where it needs to get to, about 401, 400 level. So that's why I think it'll have a little bit more to go. But if we look at previous history again, once it made this recovery, again, it tried to get to the 50 EMA, but as you can see here, it failed to do so. So if I remove this, you see it better. And then it did test it on this day, but did not break through. So it might be one of the things that the institutional investors try to do is try to get it up here to the 50 EMA around the 400 level. Can consolidate a bit, test it. If it breaks out, we get a good recovery. If it gets rejected again, then we see further downside. So that's the SPY in a nutshell. Now let's go ahead and go to the small caps. I do have about 6 that I have been posting on the chat room and that I'm looking at so far. So right now, let's go ahead and start in no particular order. I'm just gonna go with NXTP. Now this one, look at this huge move. Does have the ability to hold on to momentum, right, or create some momentum and continue its upward action. Now every time it makes this move, though, you can see the volatility in it. So in this one is, if we have some money, if we have some gains, we're gonna take profits and just let it go, let it be, move on to the next one. So right now we do have this huge price action day, but with a very, very weak close. It closed right in between the entire price action. So you know, you can see that it wasn't a very strong close, which means that there was no continuation. As you can see, came back down to the 20 and 9 EMA, bounced back up, and now it's trying to get back above. Now it does say that it closed at 0.3644, but that was like a quick glitch. If it opens around 40, we can maybe have room to 50 cents, or anything above 45 cents we can start taking profits, or maybe just take everything off the table. Again, just remember that when we have this upper wicks, it's telling you that there are sometimes a lot of shorts in it. So we don't want to be caught in something that might create a bag holding situation. Again, I hate bag holding. I don't recommend it for anyone. So be aware of that. And that's NXTP. Next one, RMED. So right now, I'm gonna go ahead and break this down so that you all can understand what I look for in this kind of setup. So what I'm looking for when I'm looking with oversold patterns is a base where there's some support at some level that is showing a possible sign of reversal, right? So we can see that in our mid. We can see that it based out down here. Okay, and it hasn't touched that level since. It's come down close to it, but you can see that kind of sort of a demand zone, if you will. Okay, and it's trying to make its move back up, break over that 50 EMA. So that 34 to 35 cent level would be your position building zone, where you want to start buying some stock and hopefully wait for the break above 35 to the 40 cent level, which is where we have this resistance level here. That would be your profit taking zone at around the 40 cent level. So if you enter at 34-35 cents, average somewhere there, that'll give you about a 10-12-13% return, which is really good. Again, we're looking for 5 to 10%. So that's RMED. I have AIHS. Same idea here, guys. Basing out at this level around the 87-88 cent level. You can see the base. So now it's found support, right? It just try to make a move, create resistance at the $1.24-25 level, and that's what we're looking for. We're looking for the break above that 125 for a possible move all the way up to 2, which is a very powerful move if it happens, but we would want to see volume with that. Now here it did try to come and test that 50 EMA. Now it bounced off of that 20 and 9 EMA, which is good. So here is where it gets a little tricky. We can kind of do different things with the entry. You can set your plan based on this candle's high. You can start your position based on this candle highs, because remember, the thing about trading is that you're always looking for the next candle to make a new high. So if we think about Monday and we get something like this, right, that we open lower than this red candle, then our entry would be at the top of this red candle here. I'm gonna try to set that line right there. That 113, 114, 115 level, once it breaks above and starts, pulling away into the upside from that entry level, then that's what we want to see. Because if we see this little action here, then we can probably see the next day, if we close strong, we could probably see that break to 150, where there's some resistance here. That's your profit take, first profit take, and then maybe eventually it will get up here. But again, I'm just waiting for this kind of move. 150 and above will be profit taking. If that move happens from the 115 level, take profits at 150. That's 30% up, around a 30% return depending on your entry, right? So that's a really nice and decent return for a 1-day hold, 2-day hold on AIHS. Again, we're gonna need to look at volume. We gotta look at the setup. But again, I believe this is gearing up to make a good move. We got this 1 touch, 2 touch, 3 touches, and if it breaks over, then you know that those are the powerful moves. Once it breaks resistance, volume comes in, algorithms start kicking in, and then buyers just take the price up higher. VGFC, this one remains in this wedge pattern, guys. So now remember that 31 cent level is key. That's our entry point, and hopefully we get to see that breakout to the upside. I want to say the 50 cent level. Now, one of the ways that I guess we trade these patterns is we look at the biggest or at the biggest end of the wedge. I guess that's the best way to explain this. So what I'm gonna did here is, so you can see this trend line that I drew. It's the size or length of the widest opening of the wedge. So that would be the kind of move that it would make if it breaks out, and that's how big of a move we might expect. It's the same size candle as this one over here. Now I wouldn't want to take profits over here. Again, I like scaling out, so I want to say the top of the wedge around the 50 cent level. That would be your first profit taking, then 55, and then 60. That would be 1, 2, 3 profit taking zones if it works and breaks out nice and clean like we expect all the time. Again, not all the breakouts are the same, so you got to take profits when you have them. Again, from 31 to the 50 cent level, let's go ahead and check to see if our investment is even worth it. Well, that's a decent move, guys. That's 50%. There's no need to wait all the way up here. I mean, just think about it. If you go in with $1,000 at 50%, you're already up $500, which is honestly a really good return, especially in this type of market and environment. So that VGFC, ENDP. So this one, again, I do like the setup. We have that base. We have 1 touch, 2 touches, and then 3 over here with a low of 28 cents, and now we got some volume kicking in. We're starting to make that little ABCD pattern here. So I want to say still that 39 cent 40 cent level for a push and a break over this 20 EMA all the way up to maybe 70 75 cents, maybe 80 cents. That's what I would be looking for. Now a good powerful break and clean break will probably come and test that $1 level, but again, we don't expect that kind of move from something that's this oversold unless there's very decent volume. Again, watch this, guys. Hopefully this is something that you can understand about price action matching the volume. So right here you see this high volume bar, but look at the price action. It's just very insignificant compared to the volume. And that's how sometimes institutions try to get you, right? They do all this buying, but they're buying and selling to themselves, so it creates a lot of volume, a lot of transactions, but the price action remains the same because they're basically coming out even. They're selling to themselves, and the volume is there. You go in, all they're doing is taking your money from you. Now let's go back and compare this at price action. Now this one is to the downside. It's a red candle, but look at the price action, the movement, the range. Okay, that's about a 40 or more than 40, from $1 to 35 cents. That's a 65 cent move. That's a lot of movement here with decent volume. So you see how the price action matches the volume. So that's something we want to look for whenever we see a breakout. We want a big volume bar with a big candle forming here as well. That way the price action will match the volume, and the people buying it are taking the price in the upward direction. So hopefully that makes sense. And last but not least, SXTC. I like this one again. Same thing, guys. Based out. You can see the base holding that support. Now we did get one good volume bar, and this is when I called it out at $2, so that would still be my entry. Now this candle here, I like it because it's an inside candle. Inside of this, it looks like an engulfing candle, so I like that. It's not a very significant engulfing candle, but SXTC, I've traded it before. We have traded it before, and it's made really good moves. So this one here gave us an inside. Oh, I'm sorry. This red candle gave us an inside candle, the engulfing green candle from the previous trading day. So what we want to do here is we want to enter at the top. Again, we want the next candle to make a new high and push towards this 50 EMA level around the 280 cent level where there's support here. Hopefully it gets there, but you would want to start taking profit at 260, 270, 280. Those be your 3 profit targets. And at an entry at the top of this candle around 207, 210. Okay, that would be your entry where you start building your position. A move from that 208 area all the way up to 260, 265. That's about a 27, 28% return. And that's good enough for you to start taking profits off the table and move on to the next stock. Guys, that's all I have for you. Hope this was educational. We'll catch you in the next one.